Okay, what to buy at the next market bottom? We all know what to buy at the market top, which is either here or close to it. And by the way, I'm broadcasting from Silicon Valley in California, the center of the universe. There is money absolutely flooding into every corner of this valley right now. It's unbelievable. Imagine a small town like San Francisco with only 1 million people in it, 5 million in greater San Francisco, with $2 trillion just suddenly dumped on it out of the blue. That is what's happening now. Maybe I can get a good price for my old Tesla Model X. Okay. So, big risk for the market. It's all about risk. I always look at risk before I do anything. And this is the problem. All of the good news for the market may already be in the price. And what is known, this is what we know is happening. We know we've had tax cuts. We know we just got an ultra dovish Fed governor, or at least he said he was ultra dovish to the president. We have massive government spending, record borrowing, national debt at 39 trillion, massive AI improvements to the profitability of big tech companies, and a record number of IPOs. Just three companies are going to raise $3 trillion. Who knows the previous record for a 1 year in IPOs? It was 600 million, and that was no 600 billion, and that was in 2022. So we are at 5 times the record of new IPOs. What happens if these IPOs suck the last free dollar out of the stock market? Or worse, people sell what they have to buy the IPOs at all-time high inflated prices. What isn't known, we don't know what the next dozen black swans are or who the president is going to invade next. Um, and it's the black swans that move the market. It's the unknowns that move the market, not the knowns. So let's talk about the 6 horses of the apocalypse. Sorry, I could only find a picture of four because that's what's mentioned in the Bible. That'll end the bull market. Well, tech stocks go higher, increasing the risk. And when they finally turn, they crash big time. I've watched this happen twice in the last 50 years, once in 1987 and once in 2009. Excessive government borrowing causes interest rates to spike. The bond market crashes. Uh, 3 trillion in new IPOs trigger a wave of selling of everything else. The build out finishes and there's no money left to be spent. If that happens a year ago, remember stocks can discount prices a year in advance. 2 trillion spent on AI demand, but the demand isn't there. The money gets spent, but the customers don't show up. No doubt this will happen to some companies, if not all of them. And of course, shrinking middle class is reducing the number of potential stock buyers. And in the end, you just may end up with billionaires buying and selling large blocks of stock to each other. That's a market that can't go up. They say a market that climbs a wall of worry. How about 6 walls of worry and climbing it all at once? That's what it's doing right now. So, what we are looking for is what to buy next. What are the next great bargains that are about to go up 5, 10, or 20 times? Well, we're going to move out of tech into non-tech, out of growth into value, out of domestic into international, out of no yield into high yield, out of dollars into foreign currencies, out of paper assets into hard ones like gold, out of crypto into anything, and that's happening today, out of digital into real world assets. This could go on for the rest of the year. Remember, we are in the what's next business. It's only what next is what generates profits in the market, not what happened in the past. So there is a method to my madness. Technology stocks, especially semiconductor ones, are reaching the tag ends of a 1999, bubble. It could be tomorrow morning is the end, a week from tomorrow, a month from tomorrow, who knows? But protecting your portfolio from the downside will soon become more important than finding out how to leverage the upside. As precious and base metals will go nowhere as long as interest rates are rising. You need a good, sharp interest rate fall for those metals to take off once again. Bonds are dead in the water on 39 trillion in national debt and 45 trillion if you add in the Iran war and the tariff failures. Long-term bull arguments of super liquidity, AI, falling interest rates are still market drivers, but much is already in the price. How much, nobody knows. Jobs data remains dire. We're looking at a zero job growth economy. There have been no net additions in jobs in 18 months. US dollar hit new multi-year lows with coming rate cuts. Bitcoin is bouncing along the bottom. We'll see if the 120 level in MSTR holds this time. So take out your pen and paper to take notes. What I'm about to tell you will blow you away and change your life. And for I am in the early retirement business, your early retirement. Learn what to buy, when to buy it, and why. And on these slides, I do fly in air shows for a hobby. I like flying vintage aircraft. So you're going to be seeing pictures of a lot of the airplanes I've flown over the years. And this particular one is a Supermarine Spitfire Model 9, which is actually older than I am. But boy, does it fly like a dream. So how'd you like to trade for a living full time? Listen to John Thomas, that's me. 55 years of experience in global financial markets, 10 years as the economist correspondent in Tokyo and later the White House under Ronald Reagan, 10 years running the international equity division at Morgan Stanley, Marine Corps combat pilot in Desert Storm, 10 years running the first international dedicated hedge fund, 5 years fracking for natural gas in Texas, and now 18 years publishing the Diary of a Mad Hedge Fund Trader. I am one of a handful of founders of the hedge fund industry who is still working. 50.97% average annualized return. That is another reason to listen to me versus 28.71% for the S&P 500. We're running at slightly less than double the S&P 500. You can see here's the S&P 500 down here. This is us. We're getting double the returns with half the volatility. We don't get giant down spikes like the market does here, here, and back here. And we make money every month. We've been up 25 months in a row, clocked in 2.51% in May. We're up 818% since we started this service nearly 20 years ago. But don't take my word for it. Listen to a very happy customer. That's if I can get this working. Okay, I'm gonna have to work on this. Maybe it needs to be reloaded or something.
Hi, my name's Wilson, and I've been with the Mad Hedge Fund Trader, John Thomas, since 2019. I caught the phenomenal returns in 2019 and 2020, somewhere in the order of the 80–90% returns on both of those years. I caught all of those trades, NVIDIA, the TLT, the Teslas, and so many more. And then in 2021, I started trading in some additional accounts, and I have caught almost all of those trades as well, and have been getting almost the entire returns that John has received, and it's been just fantastic.
All right, thank you very much, Wilson. And let's see how Wilson did this. Look at the exact trades that he did to pull off those kind of results. He made 482% on NVIDIA, 811% on NVIDIA, 421% on Berkshire Hathaway, 412% on JP Morgan, 394% on Palo Alto Networks, 350% on Vertex Pharmaceutical, 113% on silver, and 87% on JP Morgan. And of course, the stocks move nowhere near these amounts. And in fact, we use option strategies to multiply our upside while minimizing your risk. And it certainly worked in the case of Wilson. So this is our secret weapon, the Mad Hedge Profit Predictor, our market timing index. This is my secret weapon. It's an artificial intelligence-driven algorithm that analyzes 30 different economic, technical, and momentum indicators all day long. And as of the close yesterday, we had a reading of 60, which means the market is overbought, approaching extreme overbought territory. You want to sell up here in the 70s and 80s, buy down here in the 10s and 20s, and you will make money like clockwork. So why do you need an algorithm? Well, why use a toolbox missing its most important tool? Algorithms have become so dominant in the market, you should never trade without one. It does the work of a seasoned 100-man research department in seconds. It runs real time and optimizes returns with the addition of every new data point far faster than any human. Imagine a trading strategy that upgrades itself 1,000 times a day. Don't go to a gunfight with a knife. If you're trading against algos alone, you will lose. Algorithms provide you with a defined systematic trading discipline that will enhance your profits. And this is 3 years of market timing index. We get a lot of buys at market bottoms, sells at market tops, buy, sell, buy, sell. It's like having a money printing machine. And I'm not the only one using algorithms. Some 80 to 90% of all current trading is algorithmic driven. This is the uh, market timing index for the last year, updated to the weekend. And you can see we had great sells in June of last year, October of last year, and now. And what happens is you see this gradually break down at the top. We've been at a top now for 2 months, and then it goes kabam on some kind of news event, probably going to be war related. And then that knocks you back down to buy territory. And the best buy entry points were here at the end of November and again on April 1st. Why cover all asset classes? Well, information about one asset class sheds light on all the others. For example, knowing what the bond market is going to do and therefore interest rates is incredibly useful when picking stocks. Some asset classes will be doing great while others are dead in the water. It'll point you to where to trade the winners and avoid the losers. Give yourself every advantage to know what is happening all the time, everywhere. So what happens when the euphoria wears off? It could have just worn off now, or it could be tomorrow or the next day, but whenever it's time to become a bear market expert. Uh, all bear stock plays are now incredibly cheap. So it's time to talk about short selling school. That's what I'm going to talk about for the next couple minutes and show you how you can protect on your portfolio on the downside. I have customers who've made so much money they can't sleep at night because they're afraid of losing it. So now is especially good time to review the world of downside hedges. Of course, the most famous one is the SDS. That's the ProShares Ultra Short ETF. And you can see here we are at all-time lows, all the way down to 56. We've just come down from over 80. Buy that, and one share of ETF gives you 2 shares of downside protection for the S&P 500 because it is a 2X. And you can see how this performs when we had the big sell-off with the Iran war launch in February. This went from 67 all the way up to 82. Take profits at the top, and you get in now, you could get a run of easily 50% on any kind of summer correction. And if you don't like a 2X, there's a 3X out there. The ProShares Ultra Pro Short S&P 500. And you can see how this performed in March when we had the meltdown. It went from 47 all the way up to 63, and then 63 all the way down to 36. Looks like a screaming buy to me. And again, this gives you 1.5 times, 3 times the leverage of the S&P 500. So you want to buy one of these for every 3 shares of S&P equivalent you have, and that'll basically neutralize your portfolio on any downside correction. You can also sell short call options against existing positions. And I give the example of Apple, which we did here last year, sorry, a Tesla. We sold the October 2025 470 calls for $38. That was only $50 out of the money. That meant we could collect $1,000 for each option as long as the stock stayed below 470 at a 60% implied volatility. Remember, when implieds are high, you get paid extra money to sell short calls against your position. Uh, so that is another way of bringing in extra income while reducing your average cost in the stock. I have people who do this every month, and they're rapidly reducing their costs in the stock to zero. At $38 a whack, it won't take long to do that. Okay. You can also buy volatility, and you can see from the end of the year all the way up into the start of the Iran war, we got a huge pop in volatility from 13 all the way up to 36. That is a triple. And there are numerous instruments you can buy volatility with in the futures market, in ETFs, and so on. And again, we are at 6-month lows in volatility. So buying volatility here, good way to protect your portfolio from the downside. And you can also buy or sell short the IPO ETF. IPOs do especially well in rising markets. They do especially bad in falling markets. And you can see the last time IPOs did poorly was at the start of the Iran war in February, and it went from 49 all the way down to 38. So shorting the IPO ETF, another way to protect yourself on the downside. There is also momentum. Momentum collapses in falling markets. It rises in rising markets. And of course, now we have momentum at an all-time high. And you can see this in the price movement of the MTUM ETF. And it has just rallied from the bottom on April 1st at 230. It's since moved up to 315, or a move of about 50% in 3 months. Before that, we sold off, and let's see, and momentum went from 257 all the way down to 230. So again, more downside protection here in the momentum ETF. You want to short it at market tops, buy it at market bottoms. Another way to do this is you just short beta, and there is an ETF on this, like there is for everything these days, the SPHB. And beta is exceptionally high in rising markets and falls in falling markets. You can see we fell here from 125 all the way down to 115, and then rocketed from 115 all the way up to 150. So good, another good way to protect yourself in down markets. And of course, you can just buy a hedge fund. There are listed hedge funds now that have ETFs that trade. And this particular one, the HDGE, rocketed into the Iran war. Like a lot of the war plays, they actually started moving in December when threats of war were made. When the war actually started on February 28th, it just kept on moving, peaked at 18 and a half. It's since sold off to 16 and a half because people are throwing away their hedges at market tops, which is always what happens. So again, you can buy this ETF to get protection in downside markets. The last move went from 15 up to 18 and a half. It's about 20%. So when all else fails, you can go to the ultimate safe haven, 90-day T-bills, currently yielding 3.6%. This is better than cash. Government guaranteed principal, endless liquidity. They trade like water, 100% collateral value for margin. So you can trade your options portfolio against it and not take a haircut. They give you 100% collateral value. Um, they You get a locked-in guaranteed income, can be sold any day, and you get paid interest all the way up till the day you own it. They'll survive any bear market. Ask any broker how to buy them because they're hard to execute on your online trading platform. And by the way, Warren Buffett has, or Berkshire Hathaway has 400 billion of these. So he obviously thinks there's value in cash or government cash equivalents. So let's talk about what to buy on the next dip. Halo stocks. You want to buy Halo stocks, which are high asset, low obsolescence. They can't easily be replaced by AI. They are immune to AI shocks, which are hitting the LAHO stocks, low asset, high obsolescence stocks, and those are mostly software companies. Halo's massively outperformed LAHO at the beginning of the year. Then they gave it up. And I'll give you some examples here. Uh, Texas Pacific Land, Corning Glass, Southern Company, Baker Hughes, Southern Copper, FedEx, Hershey, Colgate, Apple, and any oil company you can find. Uh, this is my buy now, high priority buy now stocks. And you want to buy Brazil, the EWZ ETF. They just had a pro-business election, falling interest rates, appreciating currency, and they're replacing the United States as a major food exporter to China because of the trade wars. So buy the EWZ ETF, and you're about to get a nice double bottom setup right here. Our target is $60. And you also want to buy emerging markets. That is cashing in on the China boom, the collapsing US dollar, and the gradual Chinese takeover of international trade as the US abdicates its position. And that never really has stopped going up. And I think we could easily hit $90 by the end of this year. EEM is the ticker symbol. You want to be buying banks. What happens after interest rates go up? Interest rates go down, and that is great for banks. And in the meantime, they're booking record profits from all of the IPOs that are hitting the market, like SpaceX and Anthropic. You want to buy Citigroup in expectation of a future interest rate decline. This is the biggest turnaround story of the major banks. It'll have the greatest upside. We're looking for over 130 a share. And Goldman Sachs, the lead manager of the SpaceX issue, has actually going into space on its own, even without a rocket. It's just those IPO fees, which are going to be in the hundreds of millions of dollars for the banking community. And if you're going to buy Goldman Sachs, you might as well buy Morgan Stanley also and get a double play on the sector. BlackRock is a fund manager whose assets are growing exponentially. Interactive Brokers cashes in on exploding options trading volume, and the stock here is at an all-time high and has gone up 10% just in the last 2 days. Second half of the barbell are technology plays, but you want to buy these after they bottom out next time. You don't want to buy them now at all-time high, or you will come to grief. Technology stocks always come back. AI innovation is still the leader and is growing exponentially. AI is enabling tech companies to shed jobs and overhead at record rates, allowing profits to explode. Market makes a great counterweight to deregulation and interest rate plays. We could spend the next 2 years rotating back and forth between these two groups. Buy the top of the current hot group, tech, or buy the bottom of the next one, Halo. You choose. I know which one I'm doing. So you want to wait for a much bigger dip, a major summer correction. before you get back into any of these stocks, and I'll list them out for you. You have NASDAQ itself. Uh, my target for the year was 25,000. People said I was excessively bullish. We're now at 26,900, and it could go higher. We have Tesla already started a major rally here. Guess what? High oil drives people to EVs. And they also have a major presence in AI. Microsoft uh, was totally dissed, going all the way up until the end of March. Since then, a major rally has started. Meta, which has been flatlining for a year. Amazon, new all-time highs. Nvidia made a new all-time high a couple of weeks ago, is having a good day today. They have the monopoly on high-end processors. Oh, I forgot to mention the airplanes. This is a P-51 Mustang, the preeminent fighter of World War II, and Alphabet, also at all-time highs. That's another early generation P-51 Mustang. Palo Alto Networks has already gone ballistic. I wouldn't chase it up here. We had a leaps on this where the customers made 170% profit. And that is a Mitchell B-25 bomber, which I fly every few years over Lake Tahoe. Bonds. You don't want to go anywhere near bonds. There is no safe haven in bonds, with yields climbing worldwide on oil-driven inflation fears. Exploding national debt now at 39 trillion. Huge, huge overhang for bonds. 10-year U.S. Treasury yields have backed all the way up to 465. Private credit is imploding. Avoid all government bonds on pain of death. They're still trapped in a 5-year trading range, but maybe about to break down on the downside. So here's your flat line for the last year, going nowhere. Here's the current yield, also moving sideways. 445 was yesterday's read. And foreign currencies. There is a big weak dollar play coming up. People are going to be dumping the US dollars once interest rates start to fall. So, major play here. The long term trend of US interest rates from here is down. This prompts sharp moves up in all of the foreign currencies. Uh, and once the war ends, currencies will rush to new highs, sell all dollar rallies, buy the Australian dollar, the euro, the British pound, the Canadian down, and even the yen. Here's the Aussie dollar, which has been the strongest of the currencies because they're getting so much business now from China. Euro also trending up over the long term, and so is the British pound. Energy and commodities. A war melt up may still be in our future. We could still see $200 a barrel if the Straits of Hormuz don't open this year. We are now let's see, February, March, March, April, May. We're now 3 months into a promised 4-week war. Persian Gulf accounts for 20% of global oil, 30% of helium needed for semiconductors, 30% of fertilizer, and 10% of aluminum. Spike will be driven by panic buying by Asian customers who have no alternative sources. This is the sharpest rise in oil prices in history, and the oil industry loves it. And of course, we've been in a lot of oil plays this year, and they all made money. America's gasoline bill has risen by over $1 billion, and more is to come. It's Iran who decides when the Straits of Hormuz open, not the U.S. Rocketing gasoline prices are giving EVs a second look. So this is West Texas Intermediate. We're having a nice $2 rally today. Haven't seen why yet, but it's almost certainly Iran related. Uh, and if you want an alternative energy play, there is a major nuclear renaissance going on, and the best way to play this is to buy nuclear fuel, or yellow cake, as it is known in the industry. Comico CCJ, the way to play this. We've already gotten a triple on this in the last year. I expect this to go higher. You can see, look at these strikes we are recommending: 41.44, 20.23, 35.38, and where are we now? 112. Yeah, those worked. Thank you very much, Mr. Yellowcake. Precious metals dead in the water right now, waiting for interest rates to fall. Um, Gold is still digesting last year's enormous gains uh, on expectations of falling interest rates, which never showed. If we do get a sudden dip in gold, buy it. I think we're going to hit 4,000 an ounce at some point. Political instability in the U.S. has become a major factor driving gold in foreign central bank buying. AI build out is creating exponential growth for silver, but high prices are forcing engineers to design it out of many applications. So here's gold. There's our exponential move to the upside, and now the flat line. You're going to get the same in the GDX, the gold miners. Barrick Gold, the world's largest gold miner. Newmont Mining, a secondary gold miner. Silver Trust, they all have the same chart. Silver Miners, the ETF there. And Wheaton Precious Metals, the silver royalty or silver and gold royalty trust. So the harsh truth is, you really need my help. Majority of individual traders lose money. They lack the correct training and discipline to succeed. Most broker research suffers from grievous conflicts of interest. Wall Street is all about moving money from the uneducated to the educated. Easy solution to that is to get educated. Fidelity did a 20-year study and learned that their top performing investors were dead people. Why do dead people do so well? They never sell. You need a real pro to guide you through the market maze. Market is not monolithic, and 95% of it can be completely ignored. There are a few great sectors and a lot of awful ones. You can earn a 10 times return on the great ones. Let a 55-year veteran steer you to safe waters. Let me sit next to you and guide your hand on every winning trade. This is our trailing 1 year return, 81%. And again, you see we basically constantly go up, limiting the downside, maximizing the upside. Again, double the S&P return with half the volatility. Richard made millions regularly following my trade alerts. He now spends his time restoring vintage aircraft and flying them over the California coast, and occasionally he lets me fly these. That's a de Havilland D4D built in 1928. Greg turned $100,000 into $3 million solely on my trade alerts. He bought a new home in Orange County, California, with Tesla solar panels, Tesla power walls, and a Tesla Model 3. Still had enough money to send 3 kids to college. So, what do we do about all this? Well, stocks, you want to stand aside, bonds stand aside, commodities buy dips, energy buy dips, currency buy dips, precious metals buy dips. If you're not up 81% in the past 12 months, as I was, you're reading the wrong newsletter or following the wrong trade mentoring service. 50.97% average annualized return for 20 years. You get those kind of returns, you get to do things that other people can't do, like take the owner's suite on the Queen Mary 2 from New York to England. By the way, I'm going back to the exact same suite in 2 weeks, where I will be holding a seminar at sea on the Queen Mary 2. You get to England, you get to take the Orient Express from London to Venice, and there you can be treated like a king. This is the very long view and why where the big money will be made. The 2000s and the 2010s were the hard decades for making money. The 2020s and the 2030s will be the easy ones as a global demographic wave brings on a new golden age. 85 million millennials will become big spenders over the next 15 years, while 80 million baby boomers, a drag on the economy, fade from the scene. That will create an economic boom that started in 2023 and could go on for the rest of the decade. Uh, the Dow average went up from 1982 to 2000 20 times in 18 years. Are you ready for a replay? Well, Take a look at that chart, assuming we had a bottom in 2009. That should take us to 120,000 in the Dow by 2030. And if you think I'm crazy, uh, we're already three-quarters of the way there. We're here now up at 80,000, up at 50,000. We only have one more double to go to get to 120,000. So this time it's different, though. We have an AI tech turbocharger. Technology is hyper accelerating on all fronts simultaneously, and the pandemic greatly sped up the rate of change. AI-based products and services are just starting to roll out. The development of functional quantum computers means that computational ability is about to increase a trillion-fold at no cost. World's major computational challenges will slowly be changed, like weather forecasting and cancer cures. Needless to say, barbell stocks dominate in this scenario and will account for the bulk of stock market gains in our lifetimes. The 90s had cheap computers, cheap operating software, and a new internet. We're now getting a replay on that times 10. That's the number of new technology drivers we have. So who will show you how to play the next 50,000 Dow points? Sit with me, John Thomas, the Mad Hedge Fund Trader, and my Global Trading Dispatch. Discover how you can tap into the top performing trade mentoring service in the industry, up 81% in a year. Follow my research and market beating trade alerts, and you will rake the profits in. Let a Marine combat pilot steer you to big profits. Um, I trade single stocks, options, and ETFs for global equities, bonds, foreign exchange, energy, commodities, precious metals, and real estate. And that is the 1932 de Havilland Tiger Moth I fly every time I go to England. Notice the design flaws, gas tank directly over your head, and no wheel, no tail wheel. You can only land this thing on grass fields. This is a typical trading record for us. We did 11 trades, 10 made money. We bought the S&P 500, made 16%. Sold short U.S. Treasuries, made 8%. Bought the Russell 2000, bought Amazon, bought Apple. Sold short Biogen, and then stopped out immediately for a 21% loss there. After that, the rest of the trades were winners on the month, and that's a very typical month for us. Uh, just a matter of time before barbell stocks break out to new all-time highs. Watch this space melt up going through 2026. Get ready to start reeling in those whoppers with Global Trading Dispatch as your guide. And yes, that is a 24-inch rainbow trout, which I caught in northern Nevada. Here's how it works. Our algorithm predicted an upside breakout in NVIDIA, and this was years ago, I might add. Um, I shoot out a trade alert, buy NVIDIA at 480 or best. It's an opening trade. And in this particular trade, $10,000 bought you 21 shares. And this was about 5 years or a couple of years ago. What happened? Well, um, it went up 45% in 22 days. Do we just sit and sell ourselves and pat ourselves on the back? No. We sent an alert that says take profits. Sell NVIDIA at 695 or best. And of course, split adjusted, that means 69.50 or best. Closing trade, and on this particular trade, we made $4,515 in just 22 days. These are our 10 baggers, stocks that went up 10 times after we recommended them. They include Zoom Communications. We got a 10x on that. Lam Research, we got a 10.6x. Square, we got a 25 bagger on that one. Moderna went up 40 times after we recommended it before the pandemic. And NVIDIA up 100 times, and of course, more than that now. And of course, the granddaddy of them all, Tesla, we recommended at a split adjusted $2.35. It's now at 440. I gained financial independence for life, and so can you. Discover how to make thousands of dollars a year in extra income. Go from complete beginner to seasoned pro in weeks. Learn how to quit your day job and trade for a living full time. Trade from anywhere, anytime. Supplement your retirement income with the satisfaction of booking winning trades by the hundreds. And that's me on the coast of North Africa, sending out a trade alert to you, struggling as hard as I can to smile because it is 120 degrees. With Mad Hedge Global Trading Dispatch, you get instant trade alerts sent out at market sweet spots, about 200 of them a year, or average nearly one a day. Live bi-weekly strategy webinars with an interactive Q&A, special reports on urgent investment topics, invitations to strategy luncheons around the world, more educational videos and webinars than you could consume in a lifetime, access to an 18-year database on investment ideas, searchable by names and ticker symbols. And I'll even tell you the name of a good surfing school for seniors in North Africa. Watch out, it's a lot harder than it looks. I got bumped on the nose after I took this picture. This is the one-stop shop. It's for individuals who want to understand what is happening with their retirement funds. It's for people who want to learn how to trade for a living full-time, get the financial education of a lifetime. It's for smaller institutions and financial advisors who can't afford an in-house research department. Get in before the next melt-up begins. With our service, you get a daily newsletter in your inbox every morning so you can enter orders. You also get Mad Hedge Hot Tips, the 5 most important things that happened today and what to do about them. This is what I'm not going to charge you for this service. I'm not going to charge you $100,000. That's what I charge my big hedge fund clients, and they're happy to pay because I make them millions of dollars. And I'm not going to charge $12,000. That's what I charge for our concierge service, so traders can get my personal cell phone number to use in emergencies. And I'm not going to charge you $3,500. That's the full price of what I'm offering you on my website. Creating this product cost me millions of dollars. Running it cost me millions of more. 6 months for just $997. That's a 71% discount to the website price. It's a limited time offer. We only take 25 new subscribers at a time. So it's first come, first serve. I can't wait to make you a top drawer trader. Just click on the chat box on the right. That'll take you to the dedicated sales page, only available today. And let's see if if the link is in there. Um, and Doug, go ahead and put the link to our sales page in there now. Um, Okay, you make the money to pay for your own subscription. Discover how an experienced hedge fund manager finds and exploits the best sweet spots in any market. And there it is. There's the link, www.medhedgefundtrader.com/GTD. So click there. That'll take you to the dedicated sales page. 6 months for just $997. Buy now and you will instantly receive a trade alert with an extremely high probability of success that you can execute immediately, make some of the most serious money in your life. And I just checked the price before I started today, and you can get in now at a better price than I did. Let's see if that's still true. Let's check this. Let's check this. And the answer is yes, you can. Uh, and just to give you a tease, this is the chart of the trade alert, which I'm about to send you the second you subscribe to our service. What I'm not going to tell you is if this is a buy or sell. To find that out, you have to subscribe. You have to go through 1,000 charts to find one this good. Let me do the heavy lifting for you. Sign up now. You'll also receive our free video course, Options Trading for Beginners. That is a 12-part course about everything you ever wanted to know about options trading for the basic beginner. So let me give you a little bit about my background. Uh, if you're going to work with me for 6 months, it's best to know who I am. My family origins are very humble. I grew up as the oldest of 7 children on a remote farm in Southern California. I lived the all-American childhood, playing Little League baseball and becoming an Eagle Scout. wasn't much to do in the old days in California except hunting, so I picked up a job as a paper boy for the Los Angeles Herald Examiner. There I found the stock pages, bought IBM at 20, sold it at 30, and suddenly found a far better way to make money than delivering newspapers off the back of a bicycle. By the time I was 16, I earned enough money to fly to Europe. By the age of 17, I visited more than 50 countries and spoke four languages. At UCLA, I majored in math and DNA research, which landed me a job at the nuclear test site in Nevada. Their yield didn't mean interest paid, but millions of Russians killed. I didn't see much of a future in that, so the government sent me to Southeast Asia for a few years of intelligence missions and research, where I learned how to fly and jump out of perfectly good airplanes. There I advised the militaries of America's Asian allies. As the war wound down, I became a foreign correspondent for The Economist magazine in London. When they learned I had a math degree, they switched me over to covering the Asian economy and the stock market. And of course, in those days, doing research meant carrying a 45 caliber Sten gun, which used to reliably jam on every sixth shot. As a foreign correspondent, I covered China during the Cultural Revolution, was the first American reporter to visit North Korea since the Korean War, and covered the rest of the continent all the way to India. I figured out very quickly you didn't need to be that smart to make money in the stock market, so I got into the industry joining Morgan Stanley. After 10 years there, I started my own hedge fund. And yes, the years have been cruel. That is my original Morgan Stanley ID card from 1983. Um, and that's me losing the All Japan National Karate Championships, never enter a karate final with a broken wrist, which I did. I served as a pilot and tank commander during Desert Storm in 1991. We lost one tank, the Iraqis lost 5,000. As you can see, I like winning. I rapidly became the top hedge fund of the 1990s, eventually bringing a 1,000% return in a decade. Then the money really started to pour in. It's an understatement to say that when you income goes from the thousands to the tens of millions, it has a big impact on your lifestyle. You get to collect the latest hot car, fly your own private plane around Europe, go marlin fishing in Mexico, and collect vintage Rolls Royces. I now spend my days pursuing my first love, finding winning trade alerts, but I now do it from my three mansions in San Francisco, Lake Tahoe, and Zermatt, Switzerland. And I've quit turning millionaires into billionaires. There is far more satisfaction leveling the playing field for the average guy and teaching him how to trade, and that includes you. If I can take a $50,000 account and turn it into 500,000, that is more job satisfaction than I can get anywhere else. In the little free time I have left, I pursue my other love, flying vintage aircraft on weekends. If you see an old plane flying loops over San Francisco or London, it's probably me. And that is a Royal Air Force 1947 Chipmunk. That is the de Havilland Tiger Moth. 1928 de Havilland D4D, which appeared in the Hell's Angels movie, which won an Academy Award in 1928. That's a Boeing Stearman, where I got my aerobatics license. The ultimate luxury, of course, is to give to those who need it. As a Marine Corps combat veteran, I volunteer for grief counseling for widows and orphans, and I'm a major donor to wounded warriors. When wildfires hit California, I visited the evacuation centers and handed out $10,000 worth of Target gift cards. So, time for us to, we've seen enough airplanes. Let's go do a little bit of flying. Let's see if I can get it started. Okay, when you make millions of dollars for your clients, you get a, oops, it stopped. Let me get it restarted. Okay. Mhm. Okay, when you make millions of dollars for your clients, you get a lot of pretty interesting invitations. $5,000 cases of wine, lunches on super yachts, free tickets to the Olympics, and dates with movie stars. So it was in that spirit that I traveled to the famed World War II fighter station at Biggin Hill in England to meet Mad Hedge concierge member Peter Monk. Peter was a poorly paid pilot for Ryanair when he first signed for my global trading dispatch. After doubling his money in the first year, Peter really started to make money. Peter plowed his Mad Hedge trading profits into a 1940 Battle of Britain veteran, a Supermarine Spitfire Mark IX, in his backyard, begging, borrowing, and trading for parts all over the world. He eventually built a fleet of 16 flying aircraft, which today are worth more than $65 million. When Peter invited me to fly one, I jumped at the chance. It was a mild and blustery day when we took off and headed for the English Channel. Even though the plane was 82 years old, we managed to brisk 250 miles per hour over the English countryside. The Spitfire could outmaneuver any plane the German Air Force threw up against it. This particular plane is credited with shooting down two Messerschmitts, and it's easy to see how. We found a clear piece of sky over the white cliffs of Dover between two big, fluffy cumulus clouds and commenced a full on aerobatic flight test. Pilots always want to see what I can do in these old planes, and this time was no different. I executed multiple loops, barrel rolls, chandelles, lazy eights, Immelman turns, and wingovers, careful never to exceed 1G limitation, or the wings might fall off. Spitfires can dive like crazy. We dropped from 8,000 to 2,000 feet in seconds. Then it was back to Biggin Hill for a 3-point landing and a pint of beer. Let me make millions of dollars for you, as I have done for thousands of other followers over the last 20 years. I look forward to working with all of you. So here's the offer you can't refuse: 6 months for just $997. Let me check the store and see if any orders have come in yet. And I can see they have. In fact, we're going to hit our 25 limitation very quickly. We've got Jay from St. Petersburg, Florida, who've come in, Karen from Cody, Wyoming, England, Ian from Cambridge, England, Seth from New York City, Judy from Memphis, Tennessee, and Peter from Shreveport, Louisiana. Okay, let me answer the questions that have come in here before the next speaker comes in. Um, John, I love reading your newsletter daily. Do you think I should sell at a loss U.S. Treasury 3.87% or bonds at 5.5%? I would get your money out of the bond market. There is no future in it. Things are going to get a lot worse before they get better. So that would be my recommendation. Stay away from all fixed income. Okay, other questions here. Here's somebody else saying they're coming back in. And okay, in your March presentation, you said the US dollar would be strong as long as interest rates are going up. Uh, so I can get a cheap vacation in Europe. Are you saying the opposite? No, as long as interest rates are high and going higher, the dollar will remain strong. Once that reverses, which could happen later this year or next year, or whenever we go into a recession, the dollar will crash and all the foreign currencies will go up at least 20%. So that is the long-term view on the currency markets. Let's see. Okay. Let me check and see how we're doing on time. And um, I have a couple minutes left. So if you have any other questions, um, how do I explain the bounces in Microsoft and Oracle? Well, uh, those sectors were screaming out for a rotation. Microsoft had gotten the cheapest that had been at any time in the last 20 years. So that was a screaming buy. With 92% of the operating systems in the world, there was no way Microsoft was ever going to go bankrupt. So a lot of that was institutions taking profits on high flyers like the semiconductor companies and rotating into the best quality uh, software stocks like Microsoft. We caught that play exactly by going into Palo Alto Networks ourselves, which practically doubled over a 2 month period. No matter how competitive AI was, it was never going to put cybersecurity out of business. In fact, it increased the demand even more for cybersecurity apps. Um, Here's a question: how much money should I start out with? We do everything from uh, advise students trading with $5,000 from their dorm beds to hedge funds with 100 billion in asset under management. So it just depends on your own personal situation. What I see a lot of customers do is they peel off 10% of their retirement funds, use it to follow my trade alerts, and it actually adds a little bit of spice to their overall returns, which usually are in index funds or something like that. So, 10% of your assets is a good place to start, and then see how the performance goes from there. Okay. Any thoughts on the SpaceX and Anthropic IPOs? Don't touch them with a 10-foot pole. These are going to come out so ridiculously overpriced. They're guaranteed to go down afterwards. I remember my experience in Tesla. Tesla came out at $32 a share. It then crashed. Everybody said Tesla was going to go bankrupt. I bought it at $16 a share, which split adjusted is a dollar 60, um, and that did well. So I never touch uh, initial public offerings because the Wall Street hype machine is in overdrive right now, guaranteed to get the highest price possible for the company and the insiders. By the way, if Elon Musk is selling his SpaceX shares, should you be buying? That's a really good question to ask right now. The same with Anthropic, same with all of these techs, IPOs, where the uh, insiders are bailing as fast as they can. Okay, any other questions here? Yeah, more of SpaceX questions. If you have SpaceX shares, sell them definitely on the IPO. This could be the high watermark just for SpaceX, but the entire industry. Okay, let's see how we're doing on time. And I think our time is up.